All right, today we'll just be talking a little bit about the fundamental aspects of trading. And I'm sure it's a topic most people actually shy away from because naturally most people are technical traders. Like I'm also I can say I'm a technical trader, but the most important thing at the end of the day is what results in the technical aspect, meaning all those charts and the structure you see first is as a result of the fundamental aspect of trading. What do I mean? You know what we do in the forex market is basically as in majority of what we do, like most of us are basically into the currency of different countries, is it not? So whatever decision the government, the central bank of a particular country makes would definitely reflect in the value of its currency, true or false?
True,
True or
true.
false? Okay, great. I don't know if you're following the Nigerian economy right now. You know, the central bank has been coming up with a lot of policies. They want to redesign the naira, and I even think the U.S. also changed some policies as regarding the dollars too. I think they brought out a bill. I think it's a bill or whether it's a law that this particular percentage of dollars that were produced within a particular year would no longer be spent. I don't know if you saw something like that in the news, right?
No.
And that, do you know that unconsciously affected the value of the dollar? Because it's simple. If I know that the dollar I have with me, for instance, is not going to be spent or acceptable in a particular period of time, what do you think I want to do? I want to dispose of it, true or false? Now, when people
True.
are rushing they are going to flood the economy with that kind of money. It's just like now the naira. They are saying we are not going to be accepting the old naira again. We are going to print new one. What do you think everybody wants to do? We want to get rid of the old nairas in in their vaults, in their whatever in their hand. At the end of the day, do you know that alone can make the naira? Of course, the naira is already valueless, right? But it can make it lose more value. Do you understand? So, in other words, it's like saying if our own goal is to trade different currencies, then we really should be aware of the bodies or the government or the people or the central banks in control of these monies, because whatever decision they make at the end of the day would also reflect in the value of that currency. That is what we're simply trying to say. So write this down. In the forex market, comma, the importance of fundamental information and economic policies cannot be
The
overemphasized.
importance
The
the
importance
importance
of
of
fundamental economic policies cannot be overemphasized in the direction or long-term trend of the market. Long-term trend of the market or the market structure. Full stop. Are you there?
yes, ma'am.
Okay, write this. The different policies made by different central banks, the different monetary policies, put it that way, because we are talking about money, not just any policy right now. The different monetary policies made by the central banks of different countries have a way of affecting the demand and supply of currencies. As markets tend to respond to these economic policies. First up. Are we together? Now remember that majority of what we do in the forex markets, the summary of everything we do is buying and selling, true or false. So meaning at the end of the day, we are dealing with what we call supply and demand. Abby?
Yes, 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 ma'am.
So what we're trying to say, in other words, is that whatever policy they make affects whether we have supply or demand. Like the instance I give you, like, okay, we can't spend dollar from so yet. It's simple. Everybody want to flood the economy with the old dollars so they can get the new one. So with the excess supply, what it means is, it's just like anything that you have too much of everything, it loses value, true or false. If you are so available,
True.
what happens? You become, I'm not saying you're worthless, but anything that is so available would lose its value. So these economic policies also affect how demand and supply operates. So write this down. For instance, whenever interest rate is increased, 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 are you there?
Yes, ma'am.
It leads to the increase in the value of the currency. Whenever interest rate is increased,
It leads to the
increase, whenever interest rate is increased, it leads to the increase in the value of the currency. Should I go on?
yes, ma'am.
Okay, so I want to explain how that works. It's simple. Generally, have you observed that? I don't know if you take notes, but did you notice that there was a time that everybody, you could almost, okay, I don't know, you're presently not in Nigeria, but there was a time where the economy was flooded with different loan companies saying, come and take loans, come and take loans, come and take loans. If you ever
Yes,
notice
yes.
something like that, good. It's simple. This thing, if you, I'm not an economic student, but at least I was a trained accountant, so I have a little bit of understanding of what's happening. When you want to flood the economy with money, it's simple. One of the things you can do is to reduce interest rates. Are you together with me? If the interest rate is low, if I know that I'm going to get a loan from you, for instance, at a very cheap interest rate, do you think I will go for it as compared to an increased interest rate? If the interest rate is cheap, what do you think would happen? I'll be able to apply for the loan, is it not?
Yes, yes, yes.
So when the interest rate is reduced, what it means is that the economy is going to be flooded, meaning there's going to be supply of money everywhere because Mr. A can apply, Mr. B can apply, excess money supply. Now, when that happens, when the supply of anything is increased, it's simple. The value would reduce. But if I increase interest rates, what does it do? It limits access, right? If you know you're going to pay a high interest rate for getting a loan, for instance, you are not going to want to apply for the loan, is it not? So whenever interest rate is increased, the supply of money in the economy will naturally reduce. Are you together with me? So the
Yes, ma'am.
little you have, When there is scarcity of something that is in huge demand, what do you think would happen? It will go up. Yes, right? If there is a piece of land, like everybody wants to buy this piece of land because we don't have much of it. It's simple. If I'm the landowner, what do you think? I could decide to say, oh, I'm no longer selling for 1 million, I'm selling for 10 million. Why? Because I know there is increased demand and my supply is reduced. So anytime interest rate is increased, it reduces the supply and therefore leads to the increase in the value of the currency. Do you understand now? So that's why we said whenever interest rate is increased, it increases the value of the currency. Now, let me tell you something. If you know the value of something is going to increase, it's going to appreciate, what would you be doing as a trader? Are you going to be buying or selling?
If it's going to increase, then you have to buy.
Exactly. So it's like saying, I know because I understand the importance, I would position as a buyer. Do you understand? So that is why sometimes on Forex Factory, when the economic news are, Forex Factory is one, of Forex Factory, right? I'll show you how to read some of this information. Most times you see the news where you're going to hear, oh, central bank governor of blah, blah, blah country is going to release an important information. So let's say it's on interest rates, which most of the time you have information on interest rate. If I see an increment, then they say they increase their interest rate. It's simple. I would expect the value of that currency to go up. So like most people that might be selling, I will be looking for an opportunity to buy that currency. Why? Because their government just increased the interest rates. Are you with me now? So I would say, oh, because they increased it, I'm supposed to buy it. Will I just jump in and go and buy? No. I would look for where the zones where we still buy in the market. Remember the zones where we buy. I would position in one of those zones, right? Depending on the trend of the market also before I place the buy. So that is how to process some of this fundamental information. Do you understand? So in addition to that, write this down. Meaning, write this still continuation of where you stop. Meaning whenever interest rate is increased, meaning whenever interest rate is increased, expect a reduction in the supply of money. Expect a reduction in the supply of money. Expect a reduction in the supply of money, and when supply is reduced, the value of the currency is expected to go up. And when the supply is reduced, the value of the money is expected to go up. And when you have an expectation of price rising, you should position for a buy.
Sorry, can you repeat the last statement?
And when you have an expectation that price will rise, remember we said it will lead to increments in price. So when you have an expectation that price will rise, you should position to buy.
All right.
Stuff. Now, if you noticed, as we've been following some of this fundamental information, for a long time, the US dollar was really, really up. If you check the chart of USD-JPY, USD-CHF for a long while, not until recently where it broke and you're waiting for it to sell. But what underlined that long-term uptrend, if you check the past month, is simple. Each month, their central bank kept increasing their interest rates so that the dollar would not be devalued. Do you understand? Each time they increased that interest rate, the dollar, when you see the news come out and all that, the dollar kept going up. So it sustained that uptrend we had. Do you understand? So that's why I would say it's not enough to just be a technical trader. You need to understand what is happening in the economy and how it's going to affect your own trading decisions. Are we still together, sir? So
Yes,
that's
ma'am.
what we're trying to say. Now, write this before I forget. Note. When dealing with money, or price, always focus on the supply side of money. Always focus on the supply side of money and not the demand. Are you there? So why do you think we want to
Yes,
focus
ma'am.
on the supply side of money and not the demand? It's simple. Everybody has a demand for money. Demand is constant. It's just like woman needs that cannot be. Even if you give birth to a baby today, that baby would almost understand. Have you seen? I think I've seen some of those videos on Instagram or YouTube where you see a small baby crying, and then the moment he was given money, he started, he stopped crying and started laughing. That's to tell you
Yes.
that even a 1-year-old understands money. So everybody wants money. Do you understand? Money is like a limited resources. Like everybody wants it, but the supply is actually limited to those who understand how the principle works. Do you understand? So when you want to relate anything to money in this first market, forget that demand. Demand is constant. So you need to focus on the supply side of money. Are we still together? So that's the meaning of that thing.
Yes, ma'am.
Now let's continue. Remember, we said whenever interest rate is increased, it increases the value of the currency. So write this down. Whenever interest rate, this is like number 2. Whenever interest rate is reduced, what do you think happens? Let me ask you that so I can be sure you have an idea. Whenever
The
interest
value
rate is reduced,
decrease.
good. So you expect the drop in the value of the currency. Now, when you know that the price of a thing is going to drop, what do you position as a seller or a buyer?
Seller.
Good. Do you understand? So that's how you. So write this: whenever interest rate is reduced, people can access more money. People can access more money. People can access more money, meaning excess money floods the economy. Meaning excess money floods the economy. Excess money floods the economy. Which in turn leads to the drop in value of the currency. Which in turn leads to the drop in the value of the currency. In other words, whenever interest rate is reduced, the value of the currency also reduces. First off. Are we still together?
Yes, ma'am.
So now another way for you to, I'm explaining now, another way for you to know an economy that is doing well, right, is actually in the value of that economy's currency. That's one way you can know if an economy is doing well or not. What do I mean? For instance, look at the Nigerian economy. Everybody knows that Nigeria is bad. True of us, like everybody's telling you, oh, this economy is bad, this economy is bad. But in reality, most people are just saying this. They don't even know how to profit from that information. And why do you think Nigerian economy is doing bad? If I might ask you, any idea? Why do you think the economy is doing bad?
is the value of our currency. One of it.
Because how does that relate? The truth is, if I ask most people tell you it's because of our leaders, blah blah blah. Yes, of course, you need sensible people to manage your resources for you to have a productive nation. But the number one thing is simple: there is no demand for the naira. If nobody is demanding the naira to increase in value. Now, one of the ways you can increase demand of the naira is simple. If you create an atmosphere or an economy where everything is thriving, let's say, for instance, we're producing nation, and of course, outsiders can come in, right? If the economy is working well, if security is secure, there's not like insecurity. If I'm a US citizen, I can walk into Nigeria and come and do business. This economy will grow. And how would I grow? Because as a US citizen, if I'm coming to Nigeria, I'm not going to come here and come and spend the dollars, true or false. I will need to change that my dollars to naira, meaning I'm going to demand supply the naira. So imagine 1 million people are migrating into Nigeria, demanding for the naira. What do you think would happen? The naira would go up. It's like everybody wants to buy. One of the reasons why US economy keep doing well. Do you know every day people are migrating into that economy? If you see an average Nigerian, they want to go to the US, right? They want to go to Canada. Of course, when they are traveling, they are not going there to spend an naira. They need to convert their currency into the currency of that economy, true or false. So the more they demand for something that is scarce, the more the value keeps going up. So one way that the Nigerian naira can ever appreciate is not these ones the government are doing. It's simple. Create more jobs, create an opportunity for outsiders to come and thrive in this economy. They are all going to be demanding for the naira. And when that happens, the value would appreciate. So until there is security, but who wants to come and do business in an economy that is not secure? Nobody. If I now bring my business here and Boko Haram can come and bomb everything, I won't stay. There was a time one of those popular companies were actually leaving. I don't know how many of them are still left, but there was a time I had game. Game now. When you go to the mall, Shoprite Mall, there's always game in some of their branches.
Yes.
Game there, right? They sold. So I can't tell you of other companies that have come and left. Why? Because the economy is not secure. And if that is not happening, the more they leave, what are they doing? They sell the naira they have with them. They're not taking it back to their country. They convert to the US dollar. So the more that happens, the more the value of this currency actually keeps dropping. Do you understand? So another thing
Yes,
you need to note is write this down. Notes. When the economy is doing well, when an economy is doing well, people move money into stocks. People move money into stocks. Because they have high returns. Because they have high returns in a less risky environment. They have high returns in a less risky environment.
All right.
While in a bad economy, or when economy is doing bad, or the economy is shitty, from stocks and move money into government bonds, people move money into bonds, government bonds. Are you there?
Yes, ma'am.
Even though they have low returns, that is to tell you that government bonds have low returns, but because they are safer, because they are safer. So let me explain that. When you see an economy that is doing well, right? If I know all the economy, like major companies in this country are doing well, I put my money and buy their stocks, right? What's the stock? A stock is like a stock is a bunch. Let me say a bunch of shares. You know, more than just one unit. You must have heard of people saying they buy shares now. They buy share. There was a time people tell you, oh, I bought shares in Zenny Bank. I bought shares in blah blah blah. You've had all of
Yes,
these
yes.
things before. Good. So shares is just like the one. But when you know, a bundle of those shares is what you call stock. Do you understand? It represents unit of ownership. So between you and I, let me ask you, you know that the Nigerian economy is doing badly. You know that Boko Haram can come into any state tomorrow. Are you going to go and put your money on a company and say you are buying into their shares or you are buying their stocks when
Oh,
tomorrow Boko Haram can decide to bomb that particular company and then everything is gone? No, right? You won't. But let's say in the US, for instance, where the economy is thriving, you are given the opportunity to buy into their stocks. Are you going to buy it or not?
definitely, I will. I will.
Exactly. So one of the things you trade that most people don't know, you see these indices. You've heard of things like US 30, Abby, US 500. You've seen them on the charts, even if you've not traded them. US 30 is actually an index that measures the performance of like first 30 companies in the US. You know, when you say something is an index or is an index, an index is an average for measuring the performance of an object or anything. Do you understand? If I'm saying, oh, I want to measure Femi's performance right now, I could come out with some factors. Do you understand? Some conditions. Those conditions are actually what we call index. So when you now say indices, you have more than one. Do you understand? You've come across US 30, true or false?
Yes, true.
Uh-huh. Now, that US 30 is like saying is an index that represents some stocks where people can invest
Okay.
in the US. Do you understand? Later on, go and check it out. Some of these companies are companies you know that you don't even know that you could be making money. Like people are buying Coca-Cola every day, but you don't know that you can actually own part of it, not owning the shares, but you could be trading because you have the experience and the knowledge. Do you understand? You could be trading it and be making money
True.
off their own. Apple, that iPhone you are using is owned by Apple, is it not? Do you know that Apple is
Yeah.
part of the US 30 companies? It's just one. You see this Boeing, this, what do you call them now? Chevron. You know Chevron now, this oil company. P&G,
Yes.
Procter and Gamble, all those companies, they are part, even this Pfizer that does paracetamol, some of this medicine. So what they do is it comprises of different economic sector. So unlike people that says, "Oh, I want to invest in the stocks of what's it called now, Zenny Bank," just that's just the banking sector. So if a bank you fail, you've lost everything. Do you understand? But for instance, Chevron is there. Chevron is in the oil and gas. Do you understand? Pfizer is in the medical aspects. Your what and Disney. People go to Disneyland. Those US 30. So it's like saying Visa that processes payments is part of US 30. So it's like saying if all these companies are doing well, this average, right? People can invest in them. Do you understand? So when your economy is doing well, one of the ways you just go and check US 30 index. If you want to know how the economy is doing, US economy, if the value of the stocks are appreciating, you will know that okay, the economy is like you're seeing an uptrend on them. Do you get? You will know that the economy is doing well. But once the economy is doing bad, it's simple. People don't want to put their money in stocks. If I know it's going to crash, if I know the market economy is going to crash, I would not be buying. Is it not? I'll be looking for what? A selling opportunity. Now, in that case, one of the ways people safeguard their money, they now move money into what we call either government bonds because government bonds are believed to be no risk, but their returns are very low. A company can declare 500 billion profits, and because you have a stock in it, you can, there's no limit to what you could earn if you're not a limited partner. You understand what I mean? But government bond is already fixed. They can tell you we're only paying you 3%. All these treasury bills and the rest of them. You know, you must have heard of them before now. Did you do economics?
Yes, yes.
Okay. Those ones are fixed, very low interest rates. But people believe that it's secure, so they will decide to go for them or put their money in what we call safe haven currencies. So put this down. In a bad economy, people also put their money or resources in what we call safe haven currencies or commodities. Safe haven currencies or safe haven commodities. Are you there?
Yes, ma'am.
Can I go on? So, in other words,
Yes,
what I
ma'am.
just did now, in case you did not note, let me repeat it. That's to tell you that anytime the economy is good, stocks and equities will be doing well on the chart. You see it. You know, that chart is a representation of what's happening. Meanwhile, in a bad economy, what it means is safe haven currencies are the ones that will be doing well. Because it's like saying, if I know there is going to be war in this country, I'll move my money away from there and put it where I know it will be safe. Do you understand? So, meaning in a time of war, where I believe is safe is where we'll be thriving because that's where everybody will be migrating to. Am I making sense? So that's
Yes,
what I'm
ma'am.
saying. In a in a bad economy, safe haven assets are the ones that thrive because people move their money into those safe haven currencies. Just like the name safe haven. When you say something is safe haven, you know, it's like saying it gives you a soft landing in case anything bad wants to happen. So, what are the examples of this safe haven currency? Number one, right? USD. That's the US dollar. Are you there? Number two, the Swiss franc. That's that CHF. The Swiss franc.
All right.
And then the third one, the JPY. That's the Japanese yen. These three currencies go high in demand during a bad economy. Even if you don't know anything about the Swiss franc, that's the CHF. Notice how have you ever had any history before when they say, oh, a Nigerian did I say military? Our politicians, they packed our money and then they went to put it in one Swiss bank. You've heard of that before.
Yes.
Now, because do you know why they always run into Swiss banks? Swiss has one of the most stable economy in the world. That's the real truth. Like, if you're looking for one of the most stable economy where they don't just come up with it, is the Swiss. And that's why majority of the world's assets, like people save in Swiss banks, all these UBS and whatever, most of them have their major headquarters, right, in Swiss. Do you understand? So that's why that CHF is one of the world's strongest safe haven currency. In fact, you must have heard of Swiss gold, is it not? Where people put their billions, bullion vans gold and all.
Yes.
All those Swiss gold is in the vaults. The people save money in the vaults in Swiss also. So that's why their currency is one of the safest. And that's where people move money in a bad economy. The US dollar is also another one. People convert, and why is that? Because almost all nations transact in the US, in the US dollar. Forget that Russia is trying to change the narrative and all of that, but it's one of the strongest ones. And also the Japanese yen is another one. Do you understand? And have you noticed that these pairs, they are almost, you find them together, USD JPY, USD
Mm.
CHF.
Yes.
Have you seen? It's why it's more risky to trade them. Do you understand? Because all of them are supposed to be doing well when the economy is bad. So when you're trading them, it's a little bit rough, right? So these are the currencies. We call these three currencies. Now the three of them are safe. So if the other economies are doing well, doing bad, you most likely have a pair that has a base. Now, note, this is where people get it wrong. Let me give you an example. CHF JPY is different from CAD CHF. True or false?
True.
Why? The importance is this: where CHF is located. In this scenario, CHF is the base. Here is the quote. So if I say CHF economy is doing well,
yeah.
If I say CHF economy is doing well, Swiss economy is doing well, it's simple. I will be buying the one that has CHF as the base. Do you get? So it's CHF JPY. CHF is the base. In this scenario, what I'll be looking for is to buy, not to sell. Do you understand? But the one that has CAD CHF, if CHF is doing well, what would you be doing to CAD CHF? You'll be selling. True or false?
Yes, true.
Because CHF is a what's it called now? Quotes. That law still applies. That's why I would say in every currency, the base, whenever the base is stronger, you buy. So if they are saying CHF is strong and CHF is down the quotes, whenever the quotes is stronger, what do? You sell. Do you understand? So let's say the Canadian economy is doing badly, right? And I now had that CHF is doing well, and I have CAD CHF. It's simple. I'll be selling. Why in a pair like CHF JPY, I would be buying. So it's also important to note, because I see people go on Forex Factory, read the news information. Let's say there is news on CHF. Femi, to be sure you understand what I've been saying since morning. The news is on CHF. You see a red folder, interest rates, and maybe their central bank governor comes to increase interest rates. Now, when interest rate is increased, what are you expecting? The value of the currency to go up or down?
Go up.
Go up, thank you. So let's say they increased the interest rate on Swiss franc. Let me now ask you, in CAD CHF, are you going to be buying or selling? Let me know, and you tell me your reason.
I'll be selling because
Why?
Because currently CHF is stronger, so against CAD, so I'll be selling for CHF.
Okay, great. Now you answered that. But what if the pair was CHF JPY? Would you be selling or would you be buying?
No.
Knowing that interest rate is going to be increased, what are you going to do?
Yes, I'll be buying.
Now, do you understand the relation? So it's not enough to know that, interest rate is increased or decreased. You understanding that relation to the currency and then the position of the currency in an exchange also matters. Do you get the point of what I was trying to raise? So thank God you actually understood that information is important. Now, right, another safe haven commodity is the gold. Are we together?
Yes, ma'am.
So that's why people, of gold in a way does not really depreciate like that. You could have 1 billion 1 billion gold, or 1 gram of gold is still 1 gram of gold. Hope you know. Do you understand? Meanwhile, your 10 naira might not necessarily mean you have a 10 naira, because it keeps depreciating. Exactly. So in a bad economy, one of the ways people hedge against this inflation and the rest of them is to put their money in assets that are appreciating. When there was something I was doing then, during, there was a time, like 3 months, 2 months ago, people say, oh, the dollar is going up, the dollar is going up. Meanwhile, it was the naira that was depreciating. Do you understand? It's simple. What me I just did then was, any naira I have, I'll just convert it into the UST. Do you understand? As an edge against the inflation that was eroding the value of the naira. So that when I now convert that USD, that USD. Oh my God. It's more like the digital dollar. Do you understand? So it was not depreciating in value, even though the naira was depreciating. So I could still converge or conserve the value of my money because it was in USDT. Do you understand? At the end of the day, when I even now convert to the naira, the exchange rate was now even crazy. I even had more. Do you understand? So that's to say that the one of the ways people conserve the value of their currency is by turning them into safe haven. So one of the things you note about gold, although there's been a lot of manipulations recently, but in a bad economy, gold is always doing well. Meaning you might be looking at an uptrend if the stock market is crashing. Am I making sense?
Yes, ma'am.
So I would not be looking for a sell opportunity on gold if I go and check US 30, for instance, and I'm seeing the economy and equities are all doing badly, I won't be selling gold. I'll be most likely looking for a buy opportunity on gold. Because if all they feel that they're going to move their money into safe haven commodities. So am I making sense, Uncle Femi? If I'm making sense, please drop some sevens on the chat box.
Yes, you are, ma'am.
Okay, now another thing you might come across, because most people, when you're reading some of this fundamental information on news, like platforms like Forex Factory, we have forexlive.com and the rest of them, they won't be telling you economy is doing bad, economy is doing well. No. You know that every field has their own unique language. If you go and meet a doctor, there are sometimes the doctor will say, this is a doctor. There are sometimes an engineer will use. There are sometimes an accountant or a lawyer will use. Now, in the Forex market too, we also have such terms. And these are what you read. So you need to be aware of them so that when you see them, you understand that, this is what it means. So when an economy is doing well, or when the market is in a positive environment, write this. When an economy is doing well, when the market is doing well, or when an economy is doing well, or when the market is in a positive environment, we said we have a risk on. I'm typing that on the screen, risk on. So what risk on means is that the economy is actually doing well. Are you there?
Yes, ma'am.
Okay. While a risk off means a negative market environment. A risk off. Risk off means a negative market environment. Full stop. So let me ask you this question to be sure we're still on the same page. In a risk-off environment, will you be selling equities or buying equities? In a risk-off. You've just written the meaning of risk-off, right?
Yes.
Good. So in a risk-off environment, will you be
It's a
buying
negative.
or selling equities?
It's a negative mark, so you'll be selling.
Great. Exactly. You are not going to be buying, right? So it makes a lot of sense. Now, before I forget, so when you read some of those news, even on your MetaTrader 4, there is one of those columns for news where they say some of those things, they talk about different currencies. They use words like risk on, risk off. So when you go now, you should be able to understand what they're trying to say and also manage your position on that currency pair. So also there are some, before we go, so because of our time, let me round it up. I can see your background is getting noisy. There are some currency pairs also that are related in their movements, right? That if you also take note of, you can know what you're supposed to be doing on the other pair. So let me give you some of those right now. Write this down.
All right.
Whenever the dollar index is rising, dollar index. Remember, I told you when you say something is an index, it measures the performance of the thing. So it's like saying the dollar index measures the performance of the dollar. Do you understand?
Yes, yes.
So if I say the dollar index is rising, what it means is the value of the dollar itself is rising. So whenever the dollar index is rising, comma, Euro USD would be falling. Are you there?
Yes, ma'am.
That is, they have an inverse relationship. That is, they have an inverse relationship.
Okay, ma'am.
You know, when something has an inverse relationship, that's like saying opposites. Now, the thing is, this dollar index does not only affect Euro USD, but it's stronger on Euro USD. Something like GBP USD too might be going down. Are we together? You know, in this case, now look at both pairs.
Yes,
I
ma'am.
just said. Can you see that the USD is their quote, why they are the base? So when the US dollar is strong, that's what I mean by rising. They are now selling because USD is strong. I know, remember, in a pair, whenever the quote is stronger than the base, what happens? You sell. So that rule still played out. Are we still together, sir?
Yes, ma'am.
But
Yes,
let's say it was the US dollar that was falling. Euro USD will be doing what? It will be buying. That's why we say their relationship are inverse. They're inversely correlated. Do you understand? Now, some of these brokers, like the broker I use, they actually have the US index on their charts. So sometimes if I go there and I'm seeing that the US index itself is on a downtrend, I won't be buying. Ooh, sorry, something just happened. I wouldn't be buying. I'm sorry, if I say that the UX index itself is on a downtrend, then most likely I'll be looking for an opportunity to buy Euro USD. Do you understand? Because they move opposite of each other. Some of these brokers, you might not see the US index, but one of the ways you can also use stylishly to know pairs that you have USD as a base. If those ones are going up, there's a possibility that Euro USD will be going down. Do you understand? Now, these laws are not the 100%,
yes,
but
ma'am.
95% of the time, I've seen them play out. Another pair like that is the GBP, GBP JPY, GBP JPY, GBP JPY, and Euro GBP. Euro GBP. They also have an inverse relationship. Inverse relationship. So that it means that, you know, nothing is 100% guaranteed. Hope you know. Since I've started trading, I think I've only noticed them moving the same direction probably about 3 times. So now imagine 3 times compared to the number of times they were going inversely, meaning if GBP is buying, Euro GBP will be in a downtrend. Now, anytime I'm chatting both of them, let's say most people don't trade Euro GBP, probably because it doesn't give as much pips as GBP GJ would do, right? But if I say that Euro GBP is on a downtrend, and I look at GBP JPY and I'm seeing a downtrend, I'll know that I've most likely done something wrong. I'll go and confirm my trend again. Do you understand? Until most
Yes, ma'am.
you will now see them. So if you're not sure, if one is looking confusing, you can go and check the other one. It will give you an idea of what you should be doing with the other one. But always remember, no rule is 100% efficient. That's one. Another one that goes correlated. This one's out, they are correlated. The CHF and the gold have a correlating relationship. They are correlated. That's like saying CHF and gold goes in the same direction. Meaning CHF must have been the base. Do you understand?
CHF and good, right?
Yes, they have a correlating relationship. But this one I don't see play out most of the time. But I feel this is the reason behind them. You know that gold is basically stored in the Swiss economy, right? So
Yes, yes.
both of them might have that correlating factor. And that is why most times if you see a pair like USD CHF, go and observe. I always use it to trade them. XAU USD. Now, you know, both of them have a correlating, meaning they are supposed to be going the same way. But in this pair now, the way it is on the chart, you know, gold is the base, CHF is a what? Is a quote. Because they are both not base, their relationship in this pair now would be inverse. I hope you know. Because it's
Yes.
like saying if I'm buying gold in this equation because gold is stronger. Do you get? That's what I'm buying. In this USD CHF, so I'm selling USD CHF because CHF is also stronger than the base. Do you get?
Yes, ma'am.
And that's I would say they have that correlating what's the correlationship, but because of the way they are paid, most times, anytime I'm buying gold, I'll be looking for a USD CHF sell. And anytime I now see that USD CHF is clearly in a downtrend and gold is also telling me to sell, I'll go and pause. I'll know that no, it's either market manipulation wants to happen, which is likely more on gold. Do you get? I will observe very well. So these are some of the tricks you can use that would help your trading. I'm trying to see if I remember. Have I mentioned CAD and oil? The Canadian dollar. Are you there?
CAD CHF. We didn't mention CAD CHF.
Not
CHF,
Canadian. CAD is CAD as a currency. Do you understand? I've not said Canadian. It's when you pair them in a pair that you have Canadian CHF. What if it's USD CAD and not Canadian CHF? Do you understand? But Canadian dollar itself and oil, they are positively correlated, meaning they are going in the same direction. So if oil is buying and CAD is the base of the exchange it is, then I will expect that CAD will go up. But what if it's the quotes? I will expect that it's going to sell. Do you understand?
Yes, ma'am.
So it's not enough to say CAD CHF. No, I didn't mention CHF, just CAD. It could be USD CAD, it could be GBP CAD. Do you understand? Don't limit it because you could have different pairs. It could be Euro CAD. But when CAD is strong and oil is strong, they are both going up. So it now depends on whether it's a base or in an exchange or both. Another one is the Chinese yuan and the AUD. They are positively correlated. I hope you know when I say all these things are positive, they are moving in the same direction. So Chinese yuan and the AUD, that's the Australian dollar, they are also positively correlated. So the thing about the Chinese yuan is the way the Chinese yuan was designed in the economy, they have one they spend. There is one, the Chinese yuan, go and read later, they have two currencies, one for outsiders and one for their economy itself. Now, the one for outsiders is what you have listed in the Forex market. You know, outsiders can only access through Forex. I hope you know. It's just like you now.
Alright.
If you travel to the US, that you are going to through the Forex market. That is, the Forex market could be from your bank or black market rates. That process of exchanging one currency is what we call Forex. So they too have one that is available. The one that is available for others is what we trade on the Forex market. You must have seen it, but in case you've not paid attention, if you've ever seen CNY on your chart before on the quote list, that's CNY
I don't
actually.
even pay attention to it.
But now you know, so later you can pay attention. So when the AUD is going up, the CNY too is like so. Depending on how it's now paid, remember what I told you. So if it's CNY something something is the base, and AUD too is the base. And another, if both of them are strong, you might likely have a buy. So that's what I mean by they are positively correlated. Another thing I want you to note when you want to trade, at least analyze 2 hours before your market session starts. Please note that down. At least analyze your chart 2 hours before the market session starts. You know, we have different sessions, right? I don't want to time, right? You know, we have the London session, the New York, the Asian session, and all of them are overlapping. Now, the London
Yes.
normally opens at 8 a.m. to 5 p.m. But you know, there is a time of the year where we always have 1 hour, they call it 1 hour daylight saving times, when the clocks shifts by 1 hour. Hope you know. So at that time, I think it opens around 7 a.m. Did you get? But before
Right.
this daylight 1 hour is 8 a.m. to 5. But once that happens, you have your 7 a.m. And that's why if you check your 4 hour candle, like on GBP USD, Euro USD as of now, their 4 hours right now is 7 a.m., 11, do you get 11, 3, and the likes of that. But whenever the 1 hour comes into play, there's a time where it shifts to 8. You know, the next 4 hours after 8, you add it like that to get the timing. Why New York session 2 p.m. to 11 p.m. So when that one I also have like it shifts. But one thing I want you to know is depending on the currency pair you're trading, you always find more volume in that particular session. What do I mean? You know, in Nigeria right now, we have the north, the east, the south, right? In the north,
Yes.
if you go to the north, you're going to find a Yoruba man. There's no way you will come the whole of the north that you will not find a Yoruba man, that you will not find someone from the east. But because that is not their main domain, you won't have more volume of a Yoruba man in the north, the way you will see a Yoruba man in a Yoruba land, that's in the south. True or false? True, right?
True. True.
The same thing, if you come to Lagos, which is the west or south, you will still going to find a lot of northerners and even easterners here, even though this is not their base, but you have more of the westerners here because this is their base. Now, the same thing with the markets. The Asian session, it moves more at night, around 1 a.m. to 10 a.m. in the morning. Now, that Asian session, Asian pairs is their denomination, just the way Yorubas are more in the West. Because Asian pairs are the one denominating the Asian market, it doesn't mean you are not going to find Euro USD, USD, whatever in that market, but their volume is not going to be much at night when the Asian session is going on. Unlike during the daytime when it's their own session. You get what I mean? So if you had a pair like AED for instance, that is an Asian pair, it might not move so fast during the day. It might not move around 12, 1. It's as if it will not be moving. No, it will be moving, but do you know, you just say, why is this market slow like this? Do you understand? Because the volume is not much, because it's not a session. But during the day, you notice GBP USD, Euro USD, boom, 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 they are gone. Then around evening, you notice that, oh, maybe GBP USD is slowing down, Euro USD. You understand? Because as at that time, their session is preparing to round up. It's already overlapped by another one that's taking over. Do you understand? So it's another thing to note about the markets. I hope I've been able to cover a lot of information that is important to you. Now, do you know how to read the Forex Factory?
Yes.
Okay,
I,
okay.
I, I think I do. If I think I have a video on it.
Okay. In summary, it's just you always find 3 folders, right? You always
Yes,
find
the red, yellow.
yellow and good. So the red folders mean high impact news is coming up. Well,
Yes, yes.
and all of that. But beyond that, hope you know how to read the information. Let's say at news time. Let me share my screen. Let me show you an example of what I'm talking about so that you can always know how it affects you. I think by the time I do this, we'll round up the class. I would have shared enough information. I thought I was on the Forex Factory just now. Mhm. Okay, so I'm on today right now. Some news have already happened. Today is Thursday, so I'll go to Thursday. Look at, can you see, you're seeing some green numbers, and then you're seeing some on red to the
Yes,
right side of
yes,
my screen.
yes.
Anytime you see green, it means that news was positive for that currency. When you see red, it means
All
it was
right.
negative. What do I do? You understand? Now, how do you know before it comes out? This is what you do. Let me use this USD as an example. Unemployment claims. I click it. Before 2:30, when this news was released, this actual box would have been empty. Why the forecast and the previous is what you see? Are we together? Before this actual 2:30, before you see a number on the actual, you'll see forecast and previous. Now, this is how you know whether it's going to be good or bad. There is an envelope to your right of the screen. After forecast previous, you click that envelope. They will tell you, are you seeing my screen right now? There's somewhere you have usual effects. Are you seeing the usual effects?
Um, Usual effect.
Pay attention, Femi. Are you seeing usual effects? Is that on my screen on the left side? Like those subtopics, there is sources, measure, usual effects. My screen time now.
Seeing it. I'm seeing it.
Okay, I'm coming. Let me reshare my screen. So in the usual effects, you always see things like actual, if actual is greater than the currency, good for. If actual is greater than forecast, like this one now, they wrote in front of usual effect, actual less than forecast is good for the currency. Did you see that? Actual less than forecast. Sometimes you see actual greater than forecast is good for the currency. But in this case, they wrote actual less than the forecast is good. So what it means is if actual needs to be less than what they forecast for it to be good for the currency. Let me now go. Can you see that the previous forecast was 221K on this? Are you seeing it? Under unemployment claims now, under US news. You're seeing forecast, they wrote 221K inside that box. Let me know if you can
Yes,
see
yes,
it. Good.
yes, I
And the
can.
news say that for this news to be favorable to USD, meaning for USD to actually go up, the actual needs to be less. Can you see that the actual figure 216 was lesser than 221? That was why it was in green. 216 was lesser than 221. That was why it's in green. So most times at the time that news came out, if it was favorable, which this one was favorable, that was why it's in green, because the actual that released was actually lesser than what they forecasted, and it's required for it to be good for the currency. USD would have bought on this news. Why pairs like GBP USD would have sold on it because they were like the base. You understand? But a base currency that had USD something USD card might have gone up because the news was good for the currency. While another pair like GBP USD, Euro USD might have sold on this information. Am I making sense? So that's another way to read it. It's not enough. Like this particular news now, tomorrow, it has not happened. Look at this, Friday 23. I clicked on that card where you have GBP, whatever, card news. Can you see forecast 0.1? Now I want to click on that envelope to know what is expected. This one says actual greater than the forecast is good for the currency. Actual needs to be greater. So meaning anything they have to release tomorrow as this actual, if it's going to favor the Canadian dollar, it needs to be more than that 0.1 that was there. Am I making sense? Am I making sense? So let's say 0.2 that was there. So let's say tomorrow
Yes,
They
ma'am.
now release this news as 0.3 or 0.15. 1.5 is greater than 0.1. If the pair was like CAD JPY, he might buy. Do you understand? Because it's good for the card. While a pair like USD card might sell on that news. But will you just go and jump in immediately? You say, no, it will follow the trend of the market. No. Meaning, if you were at a support that was not buying, maybe it lacked volume, the market was not moving, and you were expecting an uptrend around that support. If that news comes out favorable, it might help push that market up. Do you understand? Because people around the world are looking at those economic
Okay.
and thinking, yes, that is what happened. So it's not that you go
Oh.
and jump by anywhere. Oh, market will show you shake it. So that's another way where you interpret or some of these fundamental informations to actually